Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast. And we have a returning guest today who appeared back in March 2022, which was episode 222. Scott Hicks, VP of Corporate Development at Lumina Group, who are a collection of junior mining companies exploring for base and precious metals across the Americas. Scott has a variety of equity and debt and advisory assignments in Canada and Australia over the last few decades. He plays major roles within the group with Lumina Group, strategic resources and future mining. And he's going to talk about each company, its projects, and the general outlook for commodities in each of those companies. Scott, welcome to the podcast. How are you doing?
Good. Thanks for having me, Rob.
No, and I appreciate your time. So obviously for those that didn't listen to the previous episode, which was nearly 2.5 years ago, just wondering if you can just give us a little bit, tell the audience a little bit about yourself, a little bit about your career before we go into obviously talking about the Lumina Group.
Yeah, sure. So I came out of banking, so I worked at BMO Capital Markets and RBC Capital Markets, so two of the larger mining-focused investment banks here in Canada. Spent a little bit of time down in Australia with BMO, and then in 2017 came across to work with Ross Beatty, who's the founder of the Lumina Group. And over the years, the group's kind of sold about 9 companies now, about 8 of which were public companies and 1 of which was a royalty co. So when I came over in 2017, it looked a lot different than it did today. We had Anfield Gold, which is now basically formed part of the creation of Equinox Gold that Ross is on the board of. We had Lumina Gold, which we still have. Luminex hadn't been created yet, which got sold this year or merged with Adventus and subsequently sold to Silver Corp. And Strategic Resources hadn't been created yet. So in 7 years, it's had a lot of already different iterations to it, but that's kind of how the group flows. We are opportunistic and we'll continue to do deals as we move forward here.
Yeah. And I suppose if you can just give us a quick, obviously, refresher for our audience and sort of recapping some of the projects that you're working on at the moment. And obviously we can then go into some of the individual companies as well.
Yeah, sure. So the two main things I spend my time on are Lumina Gold. So that's a very large gold copper porphyry down on the coast of Ecuador. For those of you who are familiar with Ecuador, it's by Machala, just south of Guayaquil. Get into that project. We're working on the feasibility study for that. And then the other company I'm spending a lot of time on right now is Strategic Resources. We're trying to build an iron pelletizer out in Quebec, and we've got a fully permanent mine in Quebec as well that could be constructed, and a brownfields project in Finland. And then the group, although we don't manage it formally, investors, we started a company called Atacama Copper with an asset next to one of our old projects, Relincho down in Chile, and we just actually renamed that to it's Fuerte now, Fuerte Metals, and we have a gentleman by the name of Tim Warman running that, and Tim had recently sold Fiore Gold to Calibre, which was a producing asset in Nevada. So we're investing in that. I'm on the board, and we're helping Tim try to grow that company.
So if we start with obviously Lumina Gold, how do you find the skill sets, obviously from banking, translating into the work that Lumina Gold is undertaking in obviously Ecuador right this moment?
Yeah, it's actually it's good timing for that question. I'm just kind of between trips down to Ecuador. We're working on negotiating the exploitation investment protection agreement with the government. It's not a standard royalty in Ecuador to companies. It's a range and it's negotiated on thresholds. So we're in the middle of negotiating that right now, and there's just a lot of scenario analysis, a lot of back and forth with the government to understand, all the moving pieces and benefits to the country of Ecuador, and also how to kind of balance that off with making sure, the project has an attractive enough return to get built in this environment, and the Lumina Gold stakeholders are kind of getting their fair share as well. So, that's pretty applicable to what I would have done in banking with a lot of modeling of scenario analysis. Obviously, over the years, raising equity, talking to investors, and looking at different sale processes and M&A crosses over with my world quite a bit as well. Our team, it's pretty lean. So if you think about it, it's kind of Marshall at CEO who's really handles all the, feasibility study, technical work for, economic studies. We did recently beef up a little bit. We added a gentleman by the name of Ron Hallis to COO, who, he's worked at Kinross and a variety of other large mining companies. So he's also assisting Marshall in that. But we got Leo Hathaway on geology and Lyle Broaden on legal and Martin our CFO. But that's kind of the team, right? So we run pretty lean in Canada. We spread the resources across a little bit of crossover, but yeah, everything kind of the finance a negotiating lane lands in my world.
And I suppose what's some of the larger challenges for obviously the management team as they tend to get the project shovel ready?
Yeah, I mean, I think the hardest part and the part that continues to surprise Ross on a regular basis is really the valuation of these junior developers. I mean, I updated this stat recently. Gold's up literally 100% since our first resource in I guess it was January 2017 that we put that out. So gold's up 100%. Our market cap is flat sitting here in 2024, and that's inclusive of all the fundraisers we've done during that period of time. We've obviously put out 3 economic studies. We've advanced the project a ton. Copper obviously is also 20% of our mix, is I think up maybe 60 or 70% during that time. So to be sitting here at kind of a $200 million round number Canadian valuation when you've got 20 million ounces of gold in the ground and a project that really over the last call it 6 months here on paper MPV5 has gone up well over 50% in value and not seen any of that trickle down to the equity price. It's pretty challenging. We know we're in the boring part of it where you're between PFS and feasibility and there's not a lot of news flow. But you would think you'd see some of that or more credit to that into the stock price. And it really just kind of speaks to the financeability. Because I think if you look historically, every company of our stage probably tries to dual track, building it or selling it. And our group's a little bit different in the sense that it's a bit more of a stated strategy to sell. But you'd like to be able to build as well. And unless those valuations improve, just raising the equity component for that, it's so challenging in these markets. And the who've been able to do it in recent years really seem to be in the kind of call it the no risk jurisdictions as viewed by the market. The people in Canada, the people in the United States are the ones that have got these things across the line for building them. But you start to get into jurisdictions that have more questions around them and it's just not as straightforward, it does get harder. So for us, it's, the valuation, and it's really getting people to realize that Ecuador is constantly improving jurisdiction for mining. You do get these country headlines and risks around security or different things lately. But, if you look at the stats, you look at the numbers, every year since Fruta del Norte and Mirador have come online, mining exports have gone up. You've had two mines get built there. El Domo, which is owned by, or was owned by Adventus, now by Silvercorp, that we merged with Luminex, that's going to be built. So it is a developing landscape in Ecuador, and these projects are going forward, and maybe not as fast as people want, but still faster than a lot of parts of the world. So, projects are getting built, projects are getting permitted.
And how would you describe Ecuador as a mining jurisdiction? Obviously, you mentioned some of the headlines that are out there. How different is the headlines compared to actually mining in Ecuador and obviously as a jurisdiction?
Sure, sure. So, I mean, if you think about the security issues towards the end of last year when there was a flare up with some of the narcotics trafficking, around port areas, none of our operations, whether it was, the Adventus stuff up north or Condor just below Fruta del Norte or Congreos and Lumina Gold out on the coast, none of those operations were affected during that time. You know, you do want to be more mindful of security now, I'd say, than when we entered the country in 2014. I think President Noboa has done a very good job of kind of stabilizing that and reversing it over the last 8 months. I think he's been a popular president since he came in just at the end of last year. We've got an election coming up next year. As of right now, it looks like I would think Noboa would get reelected. But that said, we've had center left and center right governments while we've been there, and the trend has continued to think about ways to make mining more doable in the country, think about ways to bring in more foreign investment. And, I can tell you from these negotiations on the exploitation IPA agreement right now with the government, you really do see a willingness to get to a deal, get to a place where it can advance and foreign investment's going to come into the country. So mining's gone from basically almost a zero in the country to now the third biggest export in Ecuador. So it's past, I think it's past bananas now, which was up there. So it's shrimp, oil, and mining as the top three. So it does continue to develop, and we're very fortunate that Lundin Gold has done an excellent job at Fruta with those operations continue to expand. Mirador, the mine that's operated by the Chinese, they're doing a large expansion right now. So, not only is the country seeing the benefit from existing mines, but they're also seeing those mines redeploy capital in for growth projects, right? Which is what we anticipate happening at Congreos. Like we've phased our capital, um, and we plan on, that mine producing for 3 decades at least. So, I think the government's starting to see the benefit of these very long-term projects that'll last decades and hopefully produce through cycles for them.
What's your view on the gold developer market as it relates to
Yeah, so I mean, we've seen it pick up a bit, which is positive. It's mostly been Canada centric, I would say. The things outside of Canada have been a little bit more China focused. So we're seeing that bifurcation as well. Obviously we saw Sino and Namibia go to Yintai. Pan American's trying to sell La Arena right now to Zijin. So we've seen the Chinese involvement in Africa and South America continue to be strong. And then, we've seen anything in North America that is fairly advanced, basically get taken up, especially in Canada. Obviously, Ross consolidated his Greenstone stake in Equinox with buying Orion out. I think people just think that's where the market is giving them value right now. So anything they can do to build that out, they're doing. So, it puts us in a little bit tougher spot in Ecuador, I'd say, to attract that M&A attention. But that said, we continue to see players come into country. We've seen Barrick come in on some greenfield land in Ecuador. We've seen Newmont say they're going to maintain, their Lundin Gold stake at Fruta, and obviously they've got that interest in Sol Gold as well through Newcrest. So, we'll see if the gold guys come into Ecuador and really take a stab at a project like Cangrejos. Everything we're hearing out of the large cap gold guys is really aligned with what our project is. Tier one levels of production, kind of call it around that 500,000 ounces of gold equivalent a year. It's got a bit of copper, which people like, especially if it's an open pit project. People are wanting the copper component in there. So, it's the valuations are tough, but we're seeing some deals get done, and I think the premiums people are getting are a little bit higher than the historical averages around that, and that probably is to do with the valuations, to find a compromise place where people are willing to transact. But yeah, it'll be interesting to see. We've had one quarter at these kind of gold price levels where people are adding a ton of cash to the balance sheet. But I think the call from investors towards the end of this year, early next year, if we keep at these $2,500 gold levels, is going to be, we'd like to see some share buybacks, maybe some more dividends, but people are going to have to start thinking about restocking on reserves and where all this capital is going to go, because everybody's out at $300-$400 an ounce of margin in the last quarter. So, if you're producing over 1 million ounces a year, it's a lot of money, and you've got all these developers trading at, sub $500 million valuations that are basically bite size in this environment. I'm hoping that the trend we've seen of M&A picking up will just continue, and broaden out from those really low risk jurisdictions.
If we look at moving on, look at strategic resources. I just want you to just tell us a little bit more about the company's shift in business strategy, and why was that undertaken?
Yeah, sure. So when we did so for those listeners that may not know, we did a RTO into strategic resources. So it was about a $20 million market cap company. We had a brownfields project in Finland, and we combined it with this larger private asset in Quebec that was fully permitted. So they had a permanent mine site, and it was a similar mine to what we had in Finland, VTM, which is vanadium titanium magnetite, and it would produce a similar concentrate. And then they had a fully permanent metallurgical facility in Port Saguenay that would process that concentrate. And we thought there was some logic in combining the two longer term. We thought it being in a public company would help with the raise to build the mine and the met facility, which was going to be about a $1.5 billion Canadian capital bill. The large shareholders, so Quebec, the government of Quebec owns 40%, and Orion Mine Finance out of New York owns 40%. And, they looked at it, and they looked at the environment we were in, and they basically asked management to think about a way to phase the capital and, make it a little bit more bite-sized than a $1.5 billion bill. So what we did is there was a component of the metallurgical facility, the iron pelletizer, that was permitted for about 1 million tons a year. And we went to the Quebec Ministry of Environment and said, we'd like to start a merchant iron pellet plant operation, but it needs to be larger to be more relevant in the iron ore space. What's the largest we could build it without, reopening our permits, basically? And the answer to that was about 4 million tons a year. So then fast forward a year, we put out a PFS on basically just the iron pelletizer and running it on a merchant basis. So what we're trying to do right now is we're trying to lock down the feed with a trader to both get the DR grade, so direct reduction grade iron into the plant, so about 4 million tons a year, pelletize that, and then send it out. And really you could build that sort of operation for about $500 million US. So a more reasonable approach from a capital perspective to get going. We've engaged SocGen to work on the project finance debt. looking to put about $300 million of project finance down on that. Quebec will fund 25% of the capital for the project, so that's quite constructive. Orion's in the mix there. And then, we'll figure out where we get the rest of the capital. So the main focus right now is really just locking down contracts for long-term feed with a trader and marketing of those pellets. And for those, Rob, who don't know why this is important, because admittedly, this was probably me 5 years ago. I knew about, basic iron concentrate, but I certainly didn't follow the kind of steel value chain going up. The second step outside of iron ore concentrate is really to pelletize. And then after that, it's to direct reduce where you get to a metallic iron. So, we kind of see in the market right now about $60 a ton premiums for these pellets over the price of just iron ore concentrate. So really, you're just kind of trying to capture that margin. Now, we've also got permits there to build a Tenova unit to do direct reduced iron or hot briquetted iron at that site. And then, that takes it up from, say, $170 a ton product to, something like a $450 a ton product. And that's really what is going to be needed for this conversion to electric arc furnaces. And so as all these people turn off their blast furnaces around the world, try to figure out how to get maybe not carbon neutral, but at least a lot less carbon embedded in their products. They have to go to EAFs and they have to use more metallic iron and more scrap iron in their mix, which is great for the recycling economy, but it does change the material flows quite a bit. So I think, over the next decade, there's going to be a lot of people trying to reposition themselves in the iron market to figure out how to get to these higher value steel products.
Still talking about strategic minerals. How is the management thinking about the long term and growth with obviously the set of assets that you have?
Yeah, so I think, post getting that financing for the pelletizer, I think there's a lot of options for us. There's either just building the DRI HBI, which is probably a similar quantum of capital to the pelletizer, what we're calling phase one. So that would be phase two. So still running just a merchant iron feed. But we have permitted, the rest of the flow sheet there for our own mines. And it's really two more furnaces to be able to remove the vanadium, the titanium, and get paid for those metals, and then end up with like an ultra high purity pig iron, which would be pretty similar to the Rio Tinto Sorel product that you see made out of Quebec. And that would be, the highest end of the spectrum for iron products before you get to actually finished steel. So, we could go that way as phase three longer term. We also have the growth option of building the concentrator in Finland at Mustavara and shipping that concentrate over to Quebec to process. And I think, there's a lot of other projects in Quebec and the trough that are interesting that could use our facility longer term. We have an advantage there at Port Saguenay in a couple aspects. Obviously, in general in Quebec, you've got cheap power, lots of hydropower. It's very economical. For pelletizing and direct reduction specifically, we're at the end of the Trans-Canada pipeline in Port Saguenay. Some of the other pellet operations that are up north, they have to do it with bunker fuel or liquid natural gas, which are obviously more expensive. They have to bring it in. So being attached to natural gas is a very large advantage for us longer term. It's a federal port too, so the port has been great working with us. Right now, they're spending $110 million to build a conveyor from the wharf up to where our plant will be. And that's funded by the federal government and the Quebec government. So that's well underway. That'll be complete next year. So well ahead of our plant being complete. But yeah, it's just a really supportive environment in Quebec to get things done. And obviously having the Quebec government as a shareholder is also helpful and then willing to fund a decent chunk of the capex for the project. So, it's good having good partners, and I think we have lots of different angles as we watch the market kind of evolve. I mean, we've seen vanadium prices come way back, but metallic iron prices and scrap metal have continued to be reasonably strong in a weak steel market right now. So, we'll watch it ebb and flow as we look to develop the pellet plant and see which way makes sense to take it in the future. But, you know, we're confident on the EAF transition. I think it's pretty clear that's a one way trip for people. And you've got titanium and vanadium also as critical metals now in North America. So having those in the mix longer term is quite positive. So yeah, I think there's lots of things we can do, but the first thing we just got to get phase one built so we've got some cash flow and a different valuation for the company going forward.
If we look at the last company that we're going to speak about, Forte, which has just recently changed its name to Forte. Wonder if you just tell us a little bit about the project, and also how do you think? Well, what do you think about your role as chair of the board?
Sure, sure. So, we started out with a project next to Relincho down in Chile there, and that is a copper porphyry target. That was kind of the initial asset in the company. And then, we ran into a bit of trouble with the surface rights access there. We couldn't drill it quite as fast as we want. So we brought in Tim to pivot the company, add some other assets. So far he's added two assets in Mexico with the acquisition of TCP1, which was a private company, and brought in some very good shareholders. Pierre Lassonde, Agnico Eagle are in the mix now. So really, the immediate focus is drilling in Mexico at the Christina project, which is a polymetallic asset in a well-developed belt in Mexico. And then, trying to get that surface access unlocked so we can drill the porphyry in Chile. And then really, continuing to look at M&A. So as I think about, how I can help Tim grow the company, it really is going to be, keeping an eye out on the landscape, bringing in opportunities that he might not be aware of, and vice versa. And then, chatting with him and Charlie, who's the you know, SVP exploration at Gold Corp, who's on the team, and really, running these opportunities to ground to grow the company. I think Tim would like to get it back to a place where it's producing and having a nice pipeline of projects that he can drill and add value to. He's a geologist by trade, so I think we have good complementing skill sets in that regard, not overlapping too much.
Lastly, what's the outlook for the obviously Lumina Group and obviously some of the companies that you've been speaking about over the, I suppose, next to 6 to 12 months? So yeah, just wondering if you can just give us I suppose, a brief overview of what you're looking to do, and I suppose what you're looking to achieve.
Sure. So, at Lumina Gold, it's really going to be, unlocking the three things that will get the project shovel ready. We're trying to do that by the end of 25. So that's the exploitation IPA agreement with the government. It's the permits. So we've now started the permitting process in Ecuador there. And then it's completing the feasibility study, which should be done in Q2 25. And, Ross is going to be pushing us to try to find a buyer all track. But I think what's become clear to us is you just need to do more to get these things sold than you used to. And we're going to do everything we can to get it shovel ready. And if we have to look at project financing and even take it down that track to take it even more into the de-risk category, we'll do that. But basically, it's really those three things to get Lumina Gold shovel ready in the next, call it year and a bit here. And then strategic, it's going to be locking down the feed for the pellet plant and getting that project finance package in the first half of 2025. That pellet plant can be built and underway. That's about call it a just over 2 year construction period to get that up and running. And then now that Luminex is gone, Luminex, although it was a smaller company, it was fairly time consuming for management. We at different points we had four different earn-ins there with partners. Obviously, we're running a drill program at Condor. So, it was a company that took a lot of our time. So I think with that gone, Now, Marshall and the team here might look to find another kind of earlier stage project where, Leo can sink his teeth into from a drilling perspective. So we're looking in the Americas and looking to see if there's anything that warrants kind of starting something new. But we've always got our eye on that.
Scott, really appreciate your time. Thank you for giving us an update on the Lumina Group and obviously associated entities underneath the umbrella. If our audience wants to reach out to you, if they want to follow your story, if they've got any questions, and maybe even do some business, how can they go about finding you? What social media platform channels are you on?
Yeah, I'm on LinkedIn and Twitter myself, and then, my email is just shicks at luminacapital.ca, so people can always reach out and email me directly. And, the websites are luminagold.com and then strategic-res, so just res.com, or just Google strategic resources and you'll find it there. But yeah, definitely if anyone has ideas or with existing assets or with new projects, we're always happy to talk to people.
Yeah, certainly. Well, we'll include those in the show notes of companies for easy access. So
Great, thanks.
wish you well for the remainder of the year going into 2025. Looks like obviously you've got a lot on your plate with those entities and those projects. So wish you well of luck and maybe come back on the podcast during next year with some further updates.
Sounds great. Thanks, Rob. Appreciate it.
All right. Thank you for listening. I hope you enjoyed the episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. And we need to obviously educate our mining industry. So great episode to share among people within our industry, but people outside of our industry to improve the image of and the brand of mining. So until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.